And everybody, it's Tim Reazor with Revere Asset Management, just at 3:30 here on a Wednesday night. So very quickly, stock nerds, market lovers, before you and I begin, listen. Since like the end of August, beginning of September, I've given you the levels to short the market. You can go back and look at this. If you go to revereasset.com, a daily market insight, and then just I do the Wednesday video. Last week I had the Thursday video, but go back just 1 week. So it's just one video a week and you'll see these types of different levels. I've got a new level for you to short. I want to show you that. And I'm going to show you what I'm doing to build my watch list for when I think this market bottoms. And if I'm wrong, I've got a watch list ready to rock and roll. And I want to show you that as we progress here. But I also want to include not just the levels for like S&P and NASDAQ. I want to show you what's driving, what's going to drive the indices. Now, if these components go one way or the other, of course, it's going to affect the indice level. So I want to show you those so you can monitor those at home. So before we do any of that, though, stock nerds, market lovers, if you have any questions, concerns, comments, you take umbrage with anything that I'm saying, all you have to do is hit me up here, right here, Tim at revereasset.com, call 855-732-5932. If you want to talk to the folks that make all the decisions in the portfolios, how they buy, how they sell, what's on their watch list, why they're doing the things that they're doing. We're the only shop, one of the few shops in the world. We're not like those strip mall advisors that get angry at me for telling you that they're strip mall advisors. We actually will talk to you and we'll talk strategy with you, whether you're a client or not. But all you have to do is reach out to any one of them, Alex, Hunter, Don. We're here to help you. We're here to empower individual investors any way we can. And then listen, America's fiduciary right here, Danny Stewart. Let me tell you, Danny helps more people navigate these really tricky waters than anybody in the free world. And I mean that because with the ever-changing tax situation, distribution situation, they're about to bump Social Security. I don't know if you saw that today. And just the myriad of people who keep being sold life insurance as an investment or these annuity products that you're paying trailers. If you had an annuity for the last 10 years, you've been paying the salesperson that sold to you for the last 10 years. And so many people don't understand the ramifications of these decisions. And Danny's here to help you. We don't sell any of those products. Danny is a neutral party in that only his experience can guide you to help break free from those shackles. So listen, want to hit anybody up here, 855-732-5932, and then stock market lovers. Little plug here for the IPO Club. Listen, they're just like you. IPO Club are investors, traders, just like you and me. We talk about the content that as Revere that we put out, and you can see I get messages all day here. In my, you can DM me if you want into the IPO Club. It's free. All you have to do is DM me or to message me. It doesn't matter. At TJ Reazor on Twitter. I'll introduce you to a couple of the folks, and then away you go. And you're free to talk stocks and markets and share what you're thinking about stocks and markets all day long. And it's a real helpful group, supportive group, and just a bunch of people that just want to get ahead, that understand that this topic, the market, can be absolutely difficult. They have a ton of empathy for anyone willing to try and endeavor. So with that, these videos are for what? Your edification purposes only. They're never ever to be misconstrued advice. Want advice, need advice, seek advice. All you have to do is give us a call, 855-732 Real Wealth. Excuse me, let me just do that again, 1-855-732-5932 is what I wanted to say. Or email any one of us like I talked about. So real quick, let's look at where we're at in time and space. It is vital right now, I think, that you understand what I mean by situational awareness. If you don't understand that this is a bearish chart on the daily, that there's a lot of room to fall here, well, you're lacking situational awareness. So the market hasn't wiped out all the weak hands yet. But what it can do, especially on a week like options expiration, is rally to resistance. And I think that's going to happen. Just like I talked about last week, that the week prior when I did the video, hey, you don't want to short down in here because these things are hard to capture. You want to wait till it comes up to this level, and then you want to put your short on. And that's like 100 points from the 21 down to that low. That's like 100 S&P points. If you think in Dow points, because that's all they talk about on the news, that's 800 Dow points roughly. You can make good money doing that. So what do I think again? Well, that tune hasn't changed. You want to wait till you get back up to the 21. And so the thought you're going to have is, well, Tim, what if we never get back to the 21? What if we just fall out of bed right now? Well, hopefully you're not super duper long and you got some cash, right? And what happens right now is that if you put your short on now, even though they found resistance at the 5 and the 8, which are the purple and green lines respectively, and it does fall, you can short there. It's just, to me, that's just a bit higher risk. You want to wait till you get to the 21. That's the higher probability. And I'm a probabilistic trader. So I want to wait for those things. I'm more than happy to be patient. I think patience is imperative in this market. And I think situational awareness is imperative. And so like if you look here at the NASDAQ, it's really the same situation, right? But let's go back to the S&Ps and take it down to an hourly chart and show you something. So you're getting, like here's this recent high to this recent low. You're getting the failures at that 50% retracement. You got a failure there again today. So, my thought is that, if you clear this level in the next 2 full trading days, you're probably coming up here to 43.73. We'll just call that 43.75. That is a 618 retracement, right? That would make sense. That's like normal for the market, stock nerds, market lovers. But look at what that level is on the 21. It's 43.74, 43.75. It would make complete sense that that's where we go up to this week. We don't have to do that. But if you're a probabilistic trader is what I'm trying to say there, that's where you would short it again. Well, Tim, what if I short it there and it goes higher? Great, just end the trade. You are in control, right? This isn't bet the farm. There's no trade that's ever bet the farm, right? So whatever percentage makes sense for you, right? That's what you're doing. And if you got 2 closes above the 21, that would indicate a shift in trend and you end that trade. So a lot to do there if we were to get up to the 21. And so it's the same setup on the NASDAQ, right? I prefer the S&Ps, super duper liquid there. But you can do any trade you want. So here's the hourly chart on the NASDAQ. You see that looks a little better, right? Looks a lot better than the S&Ps, but where are we at in time and space? Oh yeah. Does it look like it wants to come up here? It absolutely positively could. So that's another, we'll call it 200 points, 250 points. So you go up another 150 points, people start feeling frisky. And then this is where the battle for the market probably starts to take shape. And so then it's just about levels. And instead of like worrying about being right or worrying about being wrong, just worry about levels. Play your own game. Use probabilities to your favor. Get out of the business of right and wrong. That's all ego driven. That ego driven stuff will kill you. It'll drive you batty. It'll make you angry. This world is littered with people who want to be right. Don't be like those people. I think the easier thing to do is be probabilistic. So let's take it one step further here. So let's go back to S&Ps and let's look at an ATR chart. And so like here, this is, okay, we fell to -1 ATR. Makes kind of sense there that we kind of pause. We've come down to -2. On a daily chart, can we come down to -3? Absolutely. If you break these levels, and I think you do have a break of these levels into the end of the month, okay? We're not even halfway through yet. We're almost, but into the end of the month. And then we bounce back November and into December. That move down here is like 40. We're just going to round up and call it 4,200. I know it says 4185. I think that's where markets are headed. 4,200, 4,150. It's not all going to happen right now, but these aren't. This is a daily downtrend, and you've got a market. If I take you to a weekly, that's really just holding serve here at the 21. If it breaks to the -1 ATR on the weekly, which isn't out of the realm of possibilities, that's about 4220, right? And then if it wants to overstretch, right, it's somewhere in here. It's so rare that you would get to -2 ATR on a weekly ATR chart of S&Ps. And so when's the last time you got there? Well, let's say non-pandemic related, right? I mean, just look, you got to go all the way back here to the year of our Lord, the end of 2018 or the start of 2018. So no, yeah, the end of 2018, because there's 2019 and the start of 2020. Yeah, the end of 2018. And so you got, this is a weekly chart. You got all the way down, right, to that -3 ATR. Now, I believe there was some rate talk there, wasn't there? And then they backed off, and then before you know it, Bob's your uncle, and you're moving forward again. It's probably, that's kind of like a trajectory now, I believe. And so let's see how it all plays out. But we're a far cry from that right now. I mean, do I think we're getting down to this fourth? I mean, well, Tim, where's 3 ATR in a weekly chart? Show me that. Sure, it's 4,000. Could you get down to 4,100? You could. But what's most likely? And so that's all I present to you. It's a market. Anything can happen. But I do know that this market will beat the most people up, that it'll cause the most amount of pain for the most amount of people at the most inopportune time as possible. And getting you excited that the market's coming back and it's time to buy the dip and then pulling the rug out from under you is absolutely what I believe this market, in fact, wants to do. So let's do this. So let's move on. So what's going to drive this train? Now it's going to be these two components, right? And by the way, I've covered all of this like ad nauseum in in the podcast, right? These last 3 or 4 podcasts have all covered this type of talk. Why earnings will be worth less with inflation, like just everything. Been a ton of economics the last 8 weeks of this podcast. And that's been driven by interest rates, and it all started with that jobs report in September. And stock nerds and market lovers, I know you've been on top of it because you've been emailing me or messaging me through the IPO Club or just DMing me. My DMs are open at TJ Reazor, and you know we've been together, we've been on it. And so let's look here. Let's look at the dollar. So we'll do DXY, right? And you got a daily chart and a double check. So I got daily, right? And so dollar breaks the 8. And so it's interesting, where were we on the ATR? Okay, we got 3 ATR, we pull back a little bit, right? And then the dollar ascends, market is super soft, right? Now the market went up just a little bit today and the dollar just did that little pullback, like only 0.5%, right? And the S&Ps aren't up that much. So here's the thought. If the market pulls back, if the dollar will pull back to the mean here in this zone, stocks probably get up to that 21 exponential moving average on the S&Ps. If the dollar is going to just consolidate here, now here's a 4-hour chart. And you got to understand, all this is doing, it's choppy because it's a dollar. This is just one big consolidation at the highs. So it's consolidating, okay? If it were to resurge, I would think stocks are super soft and the market probably gets taken down except for a couple groups. Watch the dollar. Okay, dollar's going to drive a lot of this train. What else drives a lot of this train here? Well, it's the interest rates, the TNX, the yield, right? And so I think the yield, and let's look at this on an ATR chart first. Daily chart, 3 ATR, pull back, a surge up to 3 ATR, now you pull back. Now look, the last time yields got the 2 ATR, they surged higher, you're at 2 ATR. Probably what's going to happen here. Doesn't have to, does not have to. But if it does, you're going to want to pay attention to a couple of group of stocks. I'm going to show you those here in a moment. So TNX is going to drive a lot of this trade, and crude oil. So look, crude oil, this is a tax on the economy right now for people that have to get to work, right? Inflation numbers came out today. We'll discuss those more on the podcast. But here, crude oil is just consolidating at the highs. It's a beautiful chart. And if you take crude oil down to like 195-minute chart, let me just do this. This is a beautiful consolidation right here. Take it down to like a 78-minute. It's a beautiful consolidation. Hits a high, comes and consolidates. If crude oil starts surging higher, man, that's going to drive that inflation trade a lot. And so, and if crude oil is truly on a path to 100, which a lot of people believe. And like, let's take a look. What's the weekly ATR situation on crude oil here? Oh, the 3 ATR is 80. We'll just round it up to 85. I mean, it's not all going to happen at once, but if it starts meandering by the end of the year up towards that $100 level, that $100 oil is not. They would call that not good for the economy. Okay, and so that would do a lot to pressure transports, that would do a lot to pressure the consumer. And so, 70% of this economy is consumer driven. So let's show you though a couple other things here. So you should have a watch list ready, and I'm going to show you the scan I'm working. I'm going to work from a weekly scan. If you want this scan, more than welcome to have it. So minimum $12, minimum 300,000. I've got a moving average cross. I've got a 5-week shooting over a 21-week, and you can see I'm doing a weekly there. And I've already got it set up for you. So I've got the scan here. So what I'm gonna do is I'm gonna run through a couple charts. I wanna show you, before I show, let me show you something that I don't, like, it doesn't look isn't my setup. Let me show you what I'm not looking for, okay, off of a weekly chart. FAST, Fastenal. Fastenal's on this list. But you see how it got rejected this week at this 10-period moving average, a 10-week right there? Like, I don't want that. Like, that's not my jam, right? At the moment, like Amazon. I mean, even though this is just one big, long weekly consolidation from that tremendous move back in 2020, it's one big, long consolidation. That's not my jam right here. What I want are, here, let's look. Not that, that right there is my jam. Well, Tim, what's so jammy about that you like that? Let's see here. You got a 5 coming through. You got a 5 coming through the 21 period right there, coming through the 8, and that's momentum, right? That's kind of my jam. Like, look at Tesla. We'll keep. Oops, excuse me. Tesla on a weekly chart, when the 5, and I'm going to draw right here, when the 5 comes through the 8, comes through the 21, and look, it does have its areas of pullback, but look at what it's doing. It's kind of holding serve, and then you get that. And so that's kind of what you're looking for. You're getting started, a little choppy, like the engine, like the gasoline engine, unlike a Tesla. Now you get to the open road, right? This is city driving. This is open road. And so go back here. What was that stock? AXTA. Yeah, that might be the start of, some city driving. And let's see if we get our jam. And let's just run a couple through. That's extended. No. Well, Tim, why no? Look at this resistance here. It doesn't. It's not as nice and tight as whatever BAP is at AXTA. No. Oh, BNS. What is that? Scotia. Who are my Canadian friends? Scotia. I'm going to butcher it. It's hockey season. I still don't know how to pronounce it. There's an arena that I believe Maple Leafs or the Senators playing. Anyway, that's my jam. And by the way, that's going to be interest rate driven, right? Let's see here. Yeah, kind of. Let's look at a couple more here. What is that? VXMT. Oh, that had earnings coming up too, so you want to beware. Extended. Dana. Could be. Little expansion there. So we've got 2. How about DK? No. XA. That's not so bad right there. What is that? ESNT. That's not so shabby right there. No, there's that Fastenal again. Fulton, no. And so we can do this. Let me see how far I want to go. IAC. Man, IAC needs to clear that level right there. Inova. Let's see. Jinko. Was that Jinko Solar? Yeah. No. Anyway, we might not get much from here. There's McCormick. Is that McCormick? McCormick Spice. So I want to work from weeklies. So a lot of you will be like, well, I want to work from dailies here. And look, I want to work from weeklies. The market's at weekly means. I want to see what's holding up weekly wise and start building from there. And so now, is this the end all to be all? No, but I run it every day. And as the market shifts, there you go, look at that, another Northern Trust. As the market shifts, these names will shift. And so what I PennyMac's not so bad there. What I pick up is that it's financials right now, right? And so that makes sense with interest rates and what we described with the interest rate talk earlier in this video. But if I start seeing different stocks start to move, especially ahead of the averages, well, then I'm paying attention, right? And I kind of know where to look. So, and quite frankly, this weekly screen, there's SoFi, it's a lot of financials. And so anyway, you can run it if you want. Starwood. That's a trust. And it's got earnings coming up here. So listen, you can run this. If you want the screen, you're more than welcome to have it. The parameters are right here if you just want to, take a screenshot. Let me see if I can get the screenshot for you. So moving average across, it's 12, 305. Like, Tim, what are the fundamentals? Look, this is purely a technical screen off the weekly. I just want to see, and I'm doing it for trend, like what stocks are coming up. And then can I write down some beginnings of a watch list? But I think we still have some room to go lower. But I laid that all out for you at the beginning of this video. Listen, Stockman's Mark Lovers, I hope it helps, okay? Let's see, who has the video tomorrow? Hunter has the video tomorrow, and then Friday. For those who know, Friday afternoon, that podcast that we do is posted right here. I'm gonna show you. It's gonna be posted right here Friday, sometime around 1 o'clock Central. It gets typically posted right here. And I'm telling you, those you can get a head start on all your research. If you subscribe, it gets emailed to you Saturday morning. And if you have it up set to update automatically when we post it, you'll get it on your Google Play or your Apple iTunes podcasting store. So with that, I hope it helps, and I will see you at the next update.